Welcome to MicroScope, where we zoom in together to make sense of the world. Today, we're zooming in on something you use every day, yet almost nobody truly understands: money. What it is, where it comes from, why it has value, and how the entire system actually works. And trust me, once you see money under the microscope, you'll never look at your bank account the same way again. 1. What is money, really? Let's start with something simple, or at least something that should be simple. Money isn't just paper, metal, or numbers on a screen. At its core, money is an agreement, a shared belief. If I give you a piece of paper with 10 printed on it, it only matters because we both trust that others will also accept it. That's it. Money works because we collectively agree that it works. But here's a mind-bending fact. For 97% of the time humans have existed, money didn't exist at all. People traded goods directly. Apples for shoes, wheat for tools. This was called bartering. And it had one major problem. What if the person who has what you want doesn't want what you have? So humans created a tool that everyone could agree on. Money. A universal yes. Over thousands of years, we've used shells, salt, stones, metal coins, gold, paper, and now, mostly digits. And today, over 97% of money is purely digital. Your balance is basically a number in a computer. 2. Where money comes from. The truth. Here's where things get interesting. Most people think governments print money. And while that's true for physical cash, it's not how most money is created. The real magic happens in banks. The two main creators of money: 1. Central banks. They control the money supply. They can print cash and set interest rates. But printed cash is only about 3% of all money. 2. Commercial banks. These are the real money machines. Banks create money through loans using a system called fractional reserve banking. Here's the wild part. When you take a loan, the bank doesn't give you someone else's savings. It simply creates new money by typing numbers into your account. That money didn't exist yesterday. It was created today because you agreed to pay it back. Most money in the world is someone else's debt. If everyone paid off all loans tomorrow, money, as we know it, would disappear. That's how deeply the system relies on borrowing. If you're enjoying this deep dive into how money works, go ahead and hit like, and consider subscribing so you won't miss our next explorations under the microscope. 3. Why money has value. Here's a question. Why does a piece of paper with 20 on it buy more than a piece of paper with 1? It's not the ink. It's not the paper. It's not backed by gold. In fact, no major currency today is backed by gold. Modern money is called fiat money, which literally means let it be. As in, this has value because the government says so, and everyone else agrees. Money works because we trust the government won't suddenly print infinite amounts. We trust others will accept it. We trust banks to hold it. We trust society to keep believing in it. Trust is the invisible foundation. When trust collapses, money collapses. Remember Zimbabwe? At one point, a loaf of bread cost $1 trillion. When trust dies, value dies with it. 4. Inflation. The silent thief. Let's zoom in on inflation. The quiet force that eats your money without you noticing. Inflation is when the prices of things rise over time. But why does it happen? Simple. When more money chases the same amount of goods, prices rise. Think of it like this. If you print more movie tickets than seats, not everyone gets to watch the movie. Money works the same way. Fun fact. Most countries aim for 2% inflation every year. That means your money loses value every year by design. And here's a shocking truth. If you keep cash under your mattress for 30 years, you're guaranteed to become poorer. But why do governments like inflation? Because inflation makes debt cheaper over time. And since our financial system is built on debt, inflation keeps the machine running. 5. Debt. The hidden engine of the economy. Let's take a closer look at debt, the heart of the money system. Debt isn't bad. In fact, without debt, the entire economy would collapse. Why? Because every loan creates new money, and every repayment destroys money. If everyone stopped borrowing, new money would stop entering the system. Businesses couldn't expand. People couldn't buy homes. Governments couldn't invest. Our system doesn't just use debt. It requires debt to survive. Here's a surprising one. The world owes over $300 trillion, more than 3 times the global GDP. This sounds terrifying, but it actually tells us something fundamental. Money isn't a thing. Money is a flow, a cycle of borrowing, spending, and repaying. 6. The future of money. Digital and decentralized. Money is evolving. We already live in a world with contactless payments, digital wallets, online banking, cryptocurrency, decentralized finance, AI-driven investing, digital-only banks. And here's a wild fact. The first Bitcoin purchase was 2 pizzas for 10,000 Bitcoin. Today, that's worth hundreds of millions of dollars. Cryptocurrencies introduced something revolutionary. Money without a central authority. A currency that runs on math, not governments. A ledger that everyone sees but no one controls. But will crypto replace traditional money? Not anytime soon. Why? Because money isn't just technology. It's law. It's policy. It's stability. It's trust. And trust takes generations to build. 7. Why understanding money matters. Money isn't about paper, coins, or screens. It's about how society organizes trust, value, and opportunity. Because when you truly understand money, you spend smarter, you save intentionally, you invest with purpose, you avoid traps, you see the system clearly, and you understand how to navigate it, not fear it. Money is the world's biggest puzzle. And now, you've seen the pieces more clearly. 8. The psychology of money. Here's something most people never realize. Money isn't just math. It's behavior. How we spend, save, invest, or borrow is driven more by emotion than logic. People buy things not only because they need them, but because they want to feel safe, respected, admired, or simply in control. Understanding the psychology of money helps you see patterns you never noticed. Some people avoid debt even when it could help them grow, while others take risks just because everyone else is doing it. When you understand your emotional relationship with money, financial decisions become clearer and less stressful. Because money isn't just an economic system, it's a behavioral system built on confidence, habits, and perception. 9. Wealth is a system, not a salary. Here's a question we rarely ask. Does earning more automatically make you wealthier? Not necessarily. Income is important, but it's only one part of the financial picture. True wealth comes from systems, from letting money circulate, compound, and quietly produce value over time. Someone with a modest salary who invests consistently can build more long-term wealth than a high earner who spends everything. Wealth isn't created by working harder. It's created by how money flows through your life. When you understand money as a system, you stop relying on luck or constant hustle. Wealth becomes a gradual process built through patience, structure, and intention, not a race to earn the highest income. Thank you for watching. If you'd like to keep exploring the hidden stories behind everyday things, please like the video and subscribe to the channel. This is MicroScope. Clarity starts with a closer look.